Now, when we invest money in stocks, we want to make sure we are tracking the rising and falling of the Dow. Here to talk all things stock market volatility is Jeffrey Massey of Massey and Associates. Good morning.
Good morning, Will.
I noticed you got the Wall Street Journal there, and you were showing me beforehand the graph that's on the front page of the paper as the stock market is rising, going down. And it's really crazy. It's a crazy ride right now, right?
It's been crazy. We got a little complacent where we had a long stretch of time without volatility. We went 15 months without even a 5% pullback. So now we're seeing lots of pullbacks, which is 5%. A correction is 10%. So right now, off the high from October, the Dow's down 4.2, S&P's down 7.7, the NASDAQ is down 13.3.
Right.
So that's really pushing. So, you know, there's a lot of volatility in the market, which can be good because it kind of shakes things out and helps people invest their money as well. So sometimes it can be good, but this is getting a little dicey.
Yeah, that's what I was going to say. For someone who's out there watching, if they have money in the market itself and they see the front page of the paper like that, should they become nervous? Should they become freaked out? Do they call someone like you and get you on the phone and say, hey, what do we do?
You know, the best part of what we do is we want to skew towards preserving assets. So preserve and protect. So we've got money in protected positions, and then we have money invested in the stock market. So if you're well diversified, this is not as much of a shock to you because your account should not be going down 13% if we're handling it because we're more conservative because we deal mostly with folks preparing for retirement.
Yeah, that's what I was going to say. And I know as you're younger, you can be a little more free with this because it will correct itself as you're going along. But as the older you get, you want to make sure that you're going to have a lot of the money that you've invested in.
Right. When you're investing, dollar cost averaging, you're putting money in out of your paycheck, say, into your 401k. Excuse me. Then, you know, with the ups and downs of the pricing, you're buying some higher, some lower. It's called dollar cost averaging. But when you retire, it's opposite. So if you have to sell shares to create that income, well, if the shares drop, you have to sell, if they drop in price, you have to sell more shares to get that same income every month. So that's when it can work against you.
So what do you think is the driving force behind this? Obviously, for a while, everything was going along pretty smooth, and a lot of people were making some good money on this. And now things are up and down, and people are getting a little freaked out.
Yeah, through the third quarter, September 30, there were 6 stocks. They call them FANG, which is Facebook, Amazon, Apple, Netflix, Google, and then they've added...
We all wish we invested in a long time ago.
Exactly right. And then you add Microsoft to that. So those 6 stocks accounted for 64% of the growth of the S&P 500. Just 6 stocks. You know, they were skewing 500 stocks in value.
Right.
So people are saying, well, gee, what's going on? Why is it up so high? My account's not up quite that high. Well, be thankful. That means you weren't overly invested in those 6 because those are the ones that are causing this downturn now. And that's what's scaring a lot of people.
And that's what's freaking a lot of people out. Well, I know you have the book as well, Massey on Money, and there are a lot of questions that people really do. If they're looking at something like this, they can go out and purchase your book. That's Amazon too, right?
Sure, it is.
It's going to make the stock go up on the Amazon. Amazon when they buy that. Thanks so much for coming. Have a great Thanksgiving.
Always a pleasure.
Great to see you. And if you would like more information about this, because it can be a scary time for a lot of people, you can review a lot of these tips on our website. That is Rhode Show.com.